I have a family member who did everything she was supposed to do. She had an annuity, protected, structured, exactly the right foundation, but a financial advisor convinced her to move the money. She even ate the early surrender charge just to get it out. And then watched her money fall in the stock market because she was swinging for the fences. And when it dropped, you know what they told her? Write it out. That's right, write it out. Well, she's still working, she's still stressing, still watching the number go down, not knowing when or if it's going to get back to the original value that it originally started at. I watched this happen for 26 years. It paralyzed people. It shocked people. People who did the right thing and then listened to the wrong voice and paid for it with years of their life they can never get back. And the worst part, it was completely preventable. Here's what nobody told her. There were 5 things working against her the entire time. Quietly, invisibly, before the market ever was the move. I call them the 5 gotchas of money. And right now, at least one of them is working against you. Whether the market is up or down, whether you know it or not, today we expose every single one. If you want to expose the gotchas, drop gotcha in the comment section below. How? Let's get started in 3, 2, 1, let's go.
Who are we? Hey, 7-figure squad. What we go? Run it up, run it up.
What's cracking, everybody? Money Smart Guy Matt Sapala here, hailing to you from Dallas, Texas. And welcome to the 7-Figure Squad YouTube channel. This channel is for people who want control. Control over the money, their decisions, their future, faith-based, real-world proven, and then that's you. Welcome home. This is episode 7B, part 2 of the discipline episode of God's Economic Code. If you haven't watched part 1 yet, go watch it first right here. Link is in the description. This episode will hit harder after you understand the story. But if you're already here, you're ready for the framework. And that framework is what changes everything. I wasn't just telling people to stay in life insurance from behind a desk. I was on television, WGN, NBC, ABC, Fox, CBS, Fox Business nationally. I was a frequent guest on WGN 720 AM, broadcasting from the Tribune Tower on Chicago's Mag Mile. And for 6 months, I hosted my own daily radio show on WAIT 650 AM in Chicago. Every day, on the air, teaching people exactly what I'm about to teach you right now. Not after the crash, but during it. I also co-hosted a national financial reality TV series on MSN Money called The Invested Life. And I was featured in the Wall Street Journal and the New York Times. While the financial world was burning, yours truly was a person the media was calling to explain what was happening and what to do about it. Not because I was lucky, because I had stayed in my lane long enough to become the authority. And what I was saying on television and radio in 2008 and 2009 is what I'm about to teach you right now. Now, before I get into the framework, I need to say something that I don't think enough people are talking about. When I look at today's economy, the volatility, the uncertainty, the speed at which things are shifting, it gives me the same EBG, the same vibe, the same aura that I felt in 2006, 2007. When? Right before everything collapsed. Now, here's what most people don't realize. The stock market has not had a major correction since the Great Depression. That's over 15 years. Now, why? Because the Federal Reserve has been artificially pumping money into the economy. How? Through programs like quantitative easing, through stimulus packages, through near zero interest rates. Trillions of dollars have been injected into the system year after year. And the market has been running on borrowed momentum. And one day, no one knows exactly when, that momentum has to correct. Now listen, I'm not here to predict the crash. I'm not a prophet. I'm not a financial advisor, and it might keep going up. Who knows? It might go up forever. But my military training kicks in every single time I look at this. We were taught, plan for the worst, but expect the best. So when the worst comes, it doesn't surprise you and you have a plan. You see, that's not fear. Again, that's discipline. And the 5 gotchas I'm about to show you are exactly what will destroy unprepared people if and when that correction comes. The families I served in 2008 weren't surprised because the plan was already in place. Let me show you how to build yours. Here's where I learned watching the Great Recession destroy people who did everything right. It wasn't one thing that got them. It was 5. 5 financial traps that operate quietly in the background of your financial life, whether you're paying attention or not. I wrote all about the 5 gotchas in my second book, Gotcha, because here's the truth. Most people don't get financially destroyed by one catastrophic decision. They get gotcha'd slowly, quietly, by 5 things nobody ever warned them about. Now, the first gotcha is losses.
In the next 4 years, 8 million American families are expected to lose their home.
The same craziness that occurred in the mortgage market occurred in the commercial real estate markets, and that's taking a little longer to show, but there are going to be big losses there. Credit cards, auto loans, you name it.
In 2008, the S&P 500 lost 37% in a single year. People had $500,000 in their 401k, woke up that morning with $315,000 in their 401k. $185,000 gone. Now here's the math nobody talks about. If you lose 50%, you need 100% gain just to get you back to zero. That's not growth, that's survival. And most people are one market correction away from having to start over. The gotcha of losses is not that markets go down, is that most people's money is sitting in accounts that go down with them. Fixed and index life insurance and fixed and index annuities don't participate in market directly into losses.
In an indexed life insurance policy, you can grow when the market grows and lock it in. It's called the annual lock-in and reset. And when the market drops, if the market drops, you experience none of the drops.
My clients in 2008 didn't lose a dollar because their foundation was built on something the market could not touch. If you don't want losses in your retirement account, drop losses in the comment section below. Which leads me to number 2. The second gotcha is healthcare. The number one cause of personal bankruptcy in America is not bed spending. Many people think it is. It's one thing called medical bills. One diagnosis, one hospitalization, one unexpected health crisis, and everything you save is redirected to that cost and expense just to keep you alive. Well, watch it happen to people who did everything right. They saved consistently, they lived below their means, they built something real, and one health event wiped it clean. Healthcare costs are the silent wealth destroyer most people never plan for until it's too late. Protection systems aren't optional. They're the wall between your family and a financial catastrophe. Which leads me to number 3. The third gotcha is taxation. You work 40 years to build a retirement account, and the day you retire, Uncle Sam shows up for his cut. Every dollar you pull from a traditional 401k or IRA or retirement plan through your employer is taxed as ordinary income. I'm talking about 403Bs, 457 plans, TSA, TSP plans. Every single one of those qualified plans will be taxed as ordinary income once you start withdrawing from them to live on in your retirement years. And it's not at capital gains income tax rates. It's taxed as ordinary income. And the government has been your silent business partner your entire career and you didn't even know. And most people never knew they signed that agreement. Here in Texas, thank God, cousin Texas, no state income tax. But federal tax, of course, still there, still waiting, still taking its share. The moment you try to access what you've built, the gotcha of taxation is not that taxes exist, is that most people have all of their money in tax deferred or taxable accounts. And they won't know the full cost until they try to use it. Basically, when you look at a 401k plan statement, just put one hand over your eye because you know a portion of that money that you're looking at, it's not going to be yours ever. If that's you and you're starting to realize that stuff, put taxed in the comment section below. Tax in the comment section below if you realize, man, Uncle Sam and cousin California, cousin New York is taking their cut. Which leads me to the fourth gotcha. The fourth gotcha is inflation. Some people call it the silent tax. And that's exactly what it is. It doesn't announce itself. It doesn't send you a bill. It doesn't show up on your statement. It just quietly erodes what you work for every single year. Your savings account is paying what? 0.5%, 1%? And inflation is running at 3, 4, 5%. Every year, your money isn't outplacing inflation. Your purchasing power is shrinking. You're not losing money on paper, but you're losing ground. Quietly, consistently, sadly, invisibly. The gotcha of inflation is that it makes doing nothing the most expensive choice you can make. Your money must be working and earning more and harder than inflation, or inflation is working against you. Last but not least, the fifth gotcha, and I would say probably the most expensive one of all. It is procrastination. Because every year, every month, every week, you wait. Every month you say, I'll get to that eventually. It's compound interest working against you instead of for you. The cost of waiting is not just lost time. It's lost interest, it's lost growth, it's lost protection, potential lost health. Procrastination is the gotcha that makes all four others worse. because none of the other four can be solved by someone who keeps saying, I'll do it tomorrow. Proverbs 22 verse 3 says, the prudent see danger and take refuge, but the simple keep going, and you pay the penalty. If you don't want to pay that penalty, drop today in the comment section below. Now, let me show you how all 5 gotchas can stack on top of each other in one person's financial life at the same time. Now, you remember that executive I'm working with from part 1? He made a stock trade in the late 2000s for $8,000. Today, that position is worth over $2 million. He's been disciplined. He stayed focused. He didn't panic sell. Accidental discipline, real results. And now he wants to retire. But here's the problem. That $2 million is sitting in an IRA, in an individual retirement account. And here's what most people don't realize about an IRA. Gotcha number 1, losses. That $2 million is fully market exposed. The year he retires, if the market drops 30%, bam, he wakes up with $1.4 million. $600,000 gone right at the finish line. And then gotcha number 3, potentially going to run into. Because every single dollar he pulls from that IRA to live on is taxed as ordinary income. At $2 million, that's a significant income tax bill for every single distribution. And it gets worse. At age 73, the IRS forces him to take out what they call required minimum distributions, RMDs, whether he needs that money or not. Every forced withdrawal, taxed. No choice, no control, no flexibility. The government decides when and how much he's got to take out. And every time he takes it out, it taxes him every time. Oh, by the way, he's also probably facing gotcha number 2, healthcare, because he's got no long-term care plan. Here's the statistic that everyone should stop and watch this right now. 1 in 2 retirees will need long-term care. 1 in 2. Half the average cost, over $100,000 a year. If his health changes, and the odds say it will, he has to spend down his primary asset to pay for care, which accelerates the withdrawals from that IRA, which accelerates the taxation of that IRA, which accelerates the spend down of that IRA, which leads us to gotcha number 4 too as well. Inflation quietly eroding what purchasing power is left inside that account. And again, gotcha number 5 is a reason this conversation didn't happen 10 years ago. He doesn't have one problem, he's at 5. All 5 gotchas stack on top of each other in one account. And he didn't know it until we sat down together. Now, this is not a unique situation. That's the situation of millions of Americans approaching retirement right now. The laser test would have caught this years ago. Let me show you how. Every time somebody told me, put your money here, Matt, put your money here, Matt, put your money here, I'm putting my money there, I ran it through one filter. Not a complicated system, not a sophisticated algorithm. 4 questions. I call it the laser test. And why I wrote about it in my first book, Faith Made Millionaire. Here's why I follow the laser system. When logic is low, emotion takes over. Gut instinct, peer pressure, FOMO, keeping up with what everybody else is doing. See, the laser test was my way of saying yes or no to any financial opportunity. Without the emotion, without the peer pressure, without winging it, shooting from the hip. 4 filters, every financial decision, no exceptions. For example, L stands for liquidity in this acronym of the laser test. L stands for liquidity. Can I access my money when I need it? Or is it locked up when I can't reach it when real life happens? S, is it safe? Is my money protected from losses? If the market drops tomorrow, does my money drop with it? Remember, a 50% loss requires a 100% gain just to get you back where you started. Third acronym in this letter, R, rate of return. Is this outpacing inflation? Is it building my purchasing power? Or is it sitting somewhere earning nothing while inflation eats it alive? Which leads me to my last one. T stands for tax advantages. When I pull this money out, how much does Uncle Sam take? Because the wealthy don't just build wealth. They protect it from unnecessary taxation. Now, let me run this executive's IRA through the laser test. L, liquid, somewhat, but on a government schedule, not his. Is this IRA safe? No, not fully market exposed. No floor in the downside because 93% of it is in one stock. 3, rate of return. Sure, it's been strong, absolutely, life-changing, but yet unpredictable and unprotected on the downside. 4, tax advantages. None, because every dollar that's inside this IRA is taxed as ordinary income. 1 out of 4, That's the filter that tells you the truth about where your money is sitting. Would I put my money there? Probably not. If that's you, you're realizing this, you're learning something from the laser test, drop laser in the comment section below. As I wrap up this episode, let me tell you about my favorite client. Who? She worked her whole entire life, raised me, sacrificed, delayed gratification, the whole thing, did everything a mother does. And when the time came, I made sure she would never have to worry about money ever again. Why? Because I retired her. Not just helped her retire, I made sure she stayed retired. Through market crashes, through recessions, through this pandemic, through everything life has thrown at her, she never lost $1 of what we built together. Because every product I put in place for her passed the laser test. Liquid when she needed it, safe from market losses, grows at a rate that outpaced inflation, and structured to minimize what the government would take. And here's what happened that I never expected, that she fell in love with what we're building. She comes to our training events. She's loved by our entire team. She lights up every room she walks into. She sees the clients we've helped. She sees the associates we've mentored. She sees the lives that have been changed through the Money Smart movement. And I believe with everything in me that being part of this movement has added excitement and years to her life. See, that's not just a financial story. This is a legacy story. And it started with one decision: to put protection in place before she needed it. Before the storm, not during it. For those of you who think about your mom right now, drop mom in the comment section below, because this is why we do this. Not for the commission, not for the income, for our moms. Now, let me talk about my third book, After the Great Recession. After watching homeowners go underwater, owning more on the mortgage than their houses was actually worth, I realized something, that most people don't lose their homes because they can't afford the payment. They lose them because they never had the right structure protecting their home equity. That experience, watching families lose what took decades to build, became the inspiration for my third book, Keep the Keys. Because here's the truth about home ownership that nobody tells you. It's one thing to get the keys, it's another thing entirely to keep the keys. Because when the big bad wolf of life comes blowing by, and life will always blow by. If you're a homeowner, as a real estate investor, it will blow by. I have a worksheet that will show you exactly where your financial structure has gaps right now. It's called the Clarity Command Score Self-Assessment. I got 7 factors in there, 7 questions scored 1 to 5. C stands for control. Do you control how and when your equity is accessed? L stands for liquidity. Do you have immediate penalty-free access to $25,000 to $100,000 in cash if needed? A, access cost. Will accessing your equity trigger a new loan payment or a large fee? R stands for rate of return. Is your home's equity outpacing inflation, or is it just sitting idle? I, insurance benefit. Do you have life insurance with living benefits you can use while you're alive? T stands for tax advantage. Is your strategy minimizing tax liability on your assets and income? And Y, last but not least, stands for yield safety. If something happens to you, does your system still provide income, provide tax protection, provide control? Now add up all the scores, total score out of 35. If you scored 30 to 35, you got a powerful plan. Matter of fact, you need to call me because we need to join forces. We need to teach other people. 20 to 29, you're exposed in key areas. Below 20, you're absolutely at risk. Equity rich, cash poor, and one life event away from losing what you've built. The free worksheet is in the description. Download it, score yourself. Be honest, in the description below, click on that link. And if you want to watch the full Keep the Keys series, we go deep on every single strategy, that playlist is inside the description too as well. You can click right here too as well. If you'd rather watch a TV style series with real stories and real strategies, that's the one. So let me put all these 3 together. Faith Meal Millionaire, the laser test, the filter for every financial decision, start there. Gotcha. The 5 traps quietly destroying most people's wealth. Know what's coming for you. And third book, Keep the Keys, how to protect what you built from the courts, from the IRS, and the people billing by the hour. 3 books, 3 solutions, and 3 born from watching real people get financially destroyed by things that could have been prevented. All the links are in the description below. By the way, you can get them on Amazon. Get them, study them, apply them. And if you want to walk through your personal financial structure with me directly or somebody on my team directly, that link is in the description too. No pressure, but the conversation might be the most important one you have all year. So let me connect this full arc one final time. We talk about episode 1, order in God's economic code, the sequence that prepares the ground. Episode 2, capacity, the ability to carry the increase. Episode 3, freedom, the responsibility that comes with it. Episode 4, structure, the foundation that holds it all. Episode 5, multiplication, the output where all 4 are operating. Episode 6, ownership, the protection of everything you built. And here, episode 7, discipline, the law that sustains all 6. Now you've got the tools. The 5 gotchas tell you what's coming. The laser test tells you how to filter. The clarity score tells you where you stand right now, because discipline without a system, it's just willpower. It's hope. And hope is not a financial strategy. And willpower eventually runs out, but systems don't. Luke chapter 16, verse 10 says, whoever can be trusted with very little can be also trusted with much. The faithful steward doesn't just work hard. He builds systems that protect what God provides. That's God's economic code. The Great Recession didn't destroy my clients because discipline was already in place before the storm arrived. The 5 gotchas didn't get them because the laser test was already filtering every financial decision. My mom, my favorite client, didn't have to worry about one single thing because the right structure was in place long before she needed it. And today, she's not just protected, she's thriving, attending events, inspiring agents, adding years to her life by watching other lives change. You see, that's just not luck. That's discipline applied before the crisis and not during it. Now, I don't know when the next correction is coming. Nobody does, but I do know this. Today's economy gives me the same EBGBs and same vibe and aura that I had in 2006, 2007. And my military training says the same thing it always says. Plan for the worst, but expect the best. So when the worst comes, it doesn't surprise you and you have a plan. That's not fear. That's faith with a structure underneath it. So if you're ready to stop getting gotcha'd by things you didn't know were coming, drop in the comments below the word discipline. Again, not for me, but for you. Let's mark this moment. And if you feel trapped in a career with a ceiling, in a business that stopped growing, in a situation where you know deep down inside that you were built for more, drop in the comments below the word movement. Again, the link in the description. No pressure, just information for you to review. But remember, information without discipline is just expensive entertainment. I will do today what others will not, to live a life tomorrow that others cannot. And that's not motivation, that's discipline. And discipline is the law that holds everything together. If this series is building something in you, consider subscribing to this channel, smash that like button, drop your biggest takeaways in the comment section below. Again, I read every one. Now, in the next episode, I'm excited about this one. We talk about counsel, because here's a hard truth. Isolation destroys wealth. The lone wolf always loses. And the smartest financial decision you'll ever make is who you choose to build that decision with. Now, you don't want to miss it. I appreciate you guys tuning in. From Dallas, Texas, I'm your money smart guy. And until we meet again, continue to live smart, continue to love smart, and be money smart today.